Bitcoin and the rest of the crypto markets have seen a nice bounce over the last couple of weeks. What's been happening? Despite all the negative press that's been circulating in the headlines, Bitcoin is still showing somewhat a resilient amount of strength. Joining us today to talk about this strength and perhaps what's next is Clem Chambers, CEO of Online Blockchain. Welcome back, Clem.
Good to be back. So as far as I'm concerned, I don't know if many people have noticed, I'm sure they have, like somebody threw a switch at the beginning of the month. It's like everything's gone boom. Now, Crypto's done that, equities have done that. And I think there's two things at work here. In general, I think the debt ceiling is coming up. And that negotiation, of course, it's going to be fraught. It's going to take longer. It's all going to be grandstanding. It's all going to be last minute stuff. And the Treasury, Janet Yellen, have put aside $400 billion of headroom by basically redirecting cash flows that would go into various parts of the government that would, in a normal case, just be spent. And that will give them to June, which is $400 billion. And that's gone into the system because that's like an injection of liquidity. And that is what spiked equities and will have spiked crypto as well, because it's a fizzy asset that is strongly affected by money supply. Anyway, on top of that, I believe that there's been various knocks on the door from regulators. And if you were an exchange that had maybe commingled your users' funds or spent them even, or shorted them, because a lot of these exchanges are bucket shops, and bucket shops were old stockbrokers that didn't actually buy the stock, and they relied on you to lose your money and for the stop losses to deal with you. And of course, you know, you would see that in crypto. So if you were one of those dodgy crypto people like FTX, you'd go, well, you know, it's gone down from 60,000 to 40,000. Why don't we just sell all our customers tokens and just have an enormous short position? It'll keep on going down. We'll help it because obviously we'll be selling their tokens as well, won't we, boys and girls? And the price is going to go down, 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 and down. But we'll have a big bag of USDC. And at some point, when we think we're near the bottom, we'll take that stable coin and we'll buy back all those tokens. And when they want them, they can have them. Or maybe only when they want them, we'll buy them back. Now, the SEC knocks on your door and goes, hello, have you been naughty? Have you sold all your clients crypto, have you? You wouldn't have done such a thing, would you? They're going to go, oh, no, buy it all back quickly. Get it all back in the right place. And you're going to go in the market and take your stable coin and turn it all back into tokens. You're going to turn it back into BTC. You're going to turn it back into ETH and all the other tokens as well. I mean, if you look at FTX, what wasn't there? The Bitcoin wasn't there. The Ethereum wasn't there. What was there? Their Mickey Mouse token that was kind of plastering over the whole. Now, if it only takes one major exchange, or one or two or three or even more, to go, oh, whoops, we better close our crypto short out and buy back all those tokens that the customers think they have, but they don't, then you get a short squeeze. And that's what I think you've seen. Because remember, with a centralized exchange, they don't have your tokens. It's an accounting system. You put your tokens in, they say you've got these tokens, you can buy and sell, but nothing's going on. It's just an accountancy system. It's like a fruit machine. And at the end of the day, when you say, can I have my 64 Bitcoin now, please? They say, yeah, sure. And they take 64 Bitcoin coins out of a bag and send them to you, or go and buy 64 Bitcoins with their stablecoin and send it to you. So it's not actually those coins that it says you've got, you haven't got them. They might not have them. It's just an accountancy system.
Okay,
so
just to clarify here, so you're saying that the markets, Bitcoin, stocks, and gold, actually, we forgot about gold, but gold's been rallying too for the last 2 months. These assets have been rallying in the last couple of weeks because of the impending debt ceiling.
Because of the money flow from the Treasury stashing $400 billion rather than spending it to use that as a buffer to get past, wasn't it last week? I mean, isn't it this week? Wasn't it yesterday when the debt ceiling was reached? So now they should stop spending because they've reached the debt ceiling. So what they've done, there's extraordinary measures. I can't remember exactly what they are. One of them's not paying some pensions, et cetera, et cetera. There's 4 things that they can do and have done. And Yellen has said they've got enough money to June. And if you do the maths, it's roughly 400 billion. Well, that 400 billion has to be in a bag, ready to be spent on and not increase the debt ceiling. So that has to be, parked. So that 400 billion is parked somewhere. Well, that's quite a lot of money. And if you park it, I mean, they haven't, well, I suppose they have got it in Fort Knox, but, that money it's got to go in the banking system. So that's actually an injection of liquidity into the marketplace.
Speaking of injection of liquidity, we're talking about basically the broader theme you're talking about is injecting liquidity. People are wondering if the Federal Reserve in the U.S. is going to re-engage quantitative easing. which is a complete 180 reversal from what they've been doing the last year.
Well, everybody's dreaming about that. Everybody's wishing it. And they keep saying, no, we're not going to do that. No. And everyone says, they're going to do it. They're going to do it. And the institutions, the financial institutions in the private sector are saying, they're going to do it. They're going to do it. They're going to do it. And the Fed say no. And everyone says they're going to. So it's just a question of who you believe and why you believe what I believe the Fed. I really do. I don't think they have a hard enough time with their credibility, even when they do a good job. You imagine if they make a complete mess of it and do a U-turn, having said clearly to everybody they're not going to do that, and having clearly said they're going to keep on going, and they're going to go longer than it's necessary to make sure it's going to happen. They've said that, and they've been very clear. So there'd be a laughing stock, and already kind of a laughing stock, but not for good reason. It would be devastating to their reputation if they then, went back on what they keep saying every week. They keep saying it. And of course, the people saying they're not going to do it have basically their salaries and their paychecks, linked to the Fed doing that. So it's the old thing about it's very difficult to explain something to somebody when their paycheck relies on them not understanding it. And I think there's an element of that. So I'm still bearish when this new liquidity stops coming in, and I think it was probably today or yesterday, you're going to see a reversal. And I think we're seeing one now. I might be completely wrong. We may have seen the bottom of all this, and it's all going to be angels singing from here on in. And nothing would make me happier, because I'm never happier than when I'm long. And the longer I am, the happier I am if it's going up. And, I would love that. But I think you'll find there's another leg down this year before it's all over.
Let me ask you this, okay? So you've been bearish for quite some time, and actually the market has been, on your side for quite some time, notwithstanding a few bounces here and there. What would make you bullish?
Well, what would make me bullish was feeling that all the COVID problems had been washed out. So, you've got a really good thing going on with China right now, because they've gone back on this incredibly negative clampdown. They clamped down on kids, they clamped down on English language, they clamped down on internet companies, they clamped down on so much stuff, and obviously locked up the whole country for months on end. And after they kind of had their COVID riots, they've gone, right, okay, you can come out now and all get ill. And, okay, internet companies, you're fine. We're fine with you now. Oh, building companies, yeah, go ahead and borrow as much as you like. Oh, they've unclamped. And that's a very positive thing. But to wash through the damage done is not overnight. And to wash through the damage done by COVID, and it's not, it shouldn't have happened. The economic damage of everything being locked down for such a long period of time, it's going to take quite a long time to wash through. And when I see the light at the end of the tunnel, which is hopefully not a train, then I will go bullish. And it will be about a year before it actually happens. So I'm thinking, this is going to be, we're going to be in a new cycle, probably the middle of next year or the end of next year. And then, so at the end of this year, there's a chance that will be the end of it. And maybe at the latest, kind of Easter next year. But I can't see this is all washed through yet. It's not. We haven't really got past all the disruption and damage and weirdness of what happened with the COVID thing. And a good 20% of global wealth was destroyed by that. And so we're all 20% poorer. And to wash that through, it's going to take 2 or 3 years. And if the politicians mess it up, and they're quite capable, it could be 5 years. And now we're in 18 months in now.
If the politicians mess it up, okay, well, let's assume that they messed up the COVID situation. I'm not saying they did or didn't. Let's just assume that they've made some mistakes. Tell us about some of the policies that the governments around the world, perhaps in the UK, where you're from, or perhaps in the US, that are still impeding economic growth. The policies that the government have right now that are impeding economic growth.
Well, the policies that are getting in the way of things have been there for quite a long time and continue to grow. And it's this ever-increasing bureaucracy and paperwork and the optimization of the customer by systems which are working against against everybody, really. And there's so much, they're calling it sludge in Europe, so much sludge. once upon a time, 2000, Bill Gates wrote a book called Business at the Speed of Light. And because of computers, we're all going to be able to sit down and go clickety-clack and have an IPO, 10 minutes later, because computers were going to telescope and get rid of all this grit and all this difficulty and all this paperwork. It was all going to go away, and everything was going to be at the speed of light. Well, the exact opposite is happening. Everything's taking longer. If you want to get a credit card, it's now difficult. If you want to open a bank account, it's now very difficult. If you want to close the bank account down, it's nigh on impossible. It's just everything has got sludged down by actually computing, because we've now got these incredibly automated systems where nobody cares about you. No, voicemail, AI saying, "Go to hold on while we play your obnoxious tune for 10 minutes." I mean, we've all sat on the phone for all morning to do something simple by some computer made a mistake and got our address wrong. Try changing it, right? And that is absolutely apogee of what destroys economies. Bureaucracy, paperwork, that was always the thing that destroyed economies, bogged them down. And, our economies, Europe especially, and I'm sure it's the same in America, are increasingly getting bogged down by regulation and paperwork, and computers say no, and call centers that don't answer or hang up on you midway through the call.
I've got a personal anecdote to just follow up on that. Yeah, let's talk about the future of banking, how the experiences of personal banking can perhaps be improved. People are talking about DeFi being the future, but consumers are stuck between a rock and a hard place, because on the one hand, people are losing trust in crypto exchanges after what happened this year with not only FTX, but pretty much everything else that's failed. But also, on the other hand, traditional banks have not provided everybody with the best service possible. I mean, I was telling you offline about, personally, I've had difficulties just canceling my credit card. I call them to cancel. They pass me around from one department to another. I've been on the phone for pretty much 2 hours. Finally, they tell me, "We're not really sure you are who your account says who you are. So your credit card's been blocked. Go to the branch, go verify your ID. They'll send us a message, then you can proceed." I said, "I just want to cancel this card that I never use." "Yeah, we understand, but we're not really sure. We're really speaking to the real David Lin. So go to the branch." How do we fix this?
I'm sure 100,000 people that see this video, there will be 100,000 people that have experienced that.
Yeah.
And it goes all the way from, B2C to B2B to B2G. It is a pestilence. And of course, that's going to make everything go slow. When I was a kid and I started a business, now, if I was that kid back then in the current environment, I probably wouldn't even be able to start it. It takes you 6 months to get off the ground. You need a runway so long just to lift off. So, that is the sort of thing that cripples growth and cripples the economy.
Yeah, it's a problem, because on the one hand, it's difficult to, they make it difficult for me to do simple things like cancel my credit card, but I trust that financial institution somewhat more than an up-and-coming crypto exchange, because the chances of that financial institution going under are still lower because of regulations, because of their capitalization. It's not?
Yeah. And you're insured. No, you're insured.
Yeah. And I'm insured. I have up to $100,000 of insurance. None of that exists for the crypto side, even though the KYC process may be simpler. There's still a higher risk. What do I do then?
Well, I think the paperwork to open a crypto account these days is just as bad as a bank. Okay. I mean, the other thing you might want to think about these days is that it does seem that the big banks are marked for death by government. Yeah, they've actually gone out of their way to make it easy for fintech. Yeah, and fintech is out there to try to get rid of banks, and the banks are kind of shriveling under this massive weight of regulation and oversight and fines and everything. And all these little scrappy fintechs are out there doing their thing, and some of them are brilliant, and most of them are terrible, absolutely terrible. And I think it was what one of your regulators came out and said, "Oh, we think the big banks are too big. I think we need to break them up." That sort of thing. So really, on the one hand, you have the government ladling out all this tar to bog everybody down, and then running around trying to smash up things that are at least meant to work and replace them with things that are on trial. It's a typical situation of nonsense that you see every day. And underlying it, because remember, if you go back into the 70s before you were born, it was like this. And along came Reagan in America and Thatcher in the UK, and everybody got on the train, and they deregulated lots of things. And it went from having to wait, 4 months to get a telephone to, getting one in 4 minutes. And that deregulation was a big wave. And then, of course, once that wave of deregulation ends, the regulation begins. And now we're getting to, well, maybe not peak regulation. There's no such thing in bureaucracy, right? But, we're going up higher and higher up that mountain of regulation. And that's just glomming everything up. It's slowing everything down. It's grinding things to a halt. And that's why there's no growth.
Just this week, on the 18th of January, Genesis, global lender Genesis, filed for bankruptcy. Crypto markets responded with, they didn't really respond. I think most of this has been priced in, has it not? We didn't see a huge correction like with FTX and with Luna. In fact, it went up. The price went up.
You'd hope so. I mean, the thing about this short squeeze that I will be talking about, I'm at almost 100% certain that there are exchanges out there covering their short positions in lots of tokens and Bitcoin and Ethereum, because the first thing these people do is they turn their Ethereum into dollars and spend it, or do whatever, hire a 500 programmers, or get a nice big office, or get a football stadium with their name on it, or whatever, or buy themselves some Lambos, all those permutations. So, if you're not going to go bust, because in theory you're covered, you're going to want to be not short of the tokens and long all the stable coins. You're going to need to buy them back, because you don't want the SEC coming in and saying, oh, you've commingled funds. You've done something to your depositors. Now we're treating you like banks, by the way. Yeah, we're just making this up as we go along. But now you're a bank. Oh no, you're not a bank. You're a broker. Banks are allowed to do that. I forgot. Yeah, you're a broker, and you're not allowed to do that. They need to be segregated funds. You haven't said that before, but they need to be segregated funds. Oh look, you haven't segregated them. Oh look, you're going to go to jail for 800 years. So if you were a exchange with that coming down the track, that light at the end of the tunnel is a train. You're going to cover your short positions, and you're just going to pile in and cover them as fast as possible, aren't you? And that's what I think's happening.
Clem, you're a business owner. Tell us, do you transact B2B with cryptocurrencies, any crypto, any blockchain tech?
In the early days, you used to do a lot of it, but then suddenly it all took off, and then nobody wanted to. It was good money, so nobody wanted to pay in crypto. They wanted to pay in dollars, and now it's a rarity. But in the early days, 2016, 17, and 18, we were taking lots and lots and lots of Ethereum in particular. And but now nobody wants to pay with crypto anymore, because remember, good money drives out bad, which means
bad money drives out the good. You mean bad money drives out the good? Bad money
drives out good. Sorry, that was questions all backwards, wasn't it? Bad money drives out good. So the bad money is what you spend, and the good money is what you keep. And it's a question, right? If bad money drives out good, why would Fiat have a problem with crypto if crypto's so bad? Well, it has a problem with crypto because Fiat's the bad money and crypto's the good money.
Let's be philosophical for a moment here. Why are you defining cryptocurrencies as the good money in this scenario? Well, versus fiat, of course.
Yeah, because you can't go, oh, whoops, there's a COVID crisis. Let's increase the money supply by 40%. Bang. Oh, you can't be Argentina and default on your bonds, or you can't be, Turkey that goes, yeah, I'm the president of Turkey, and I know more about economics than all those Nobel Prize winners. Let's do it my way. Yeah, you can't do a Zimbabwe and actually never bother even using your $100 trillion notes, because they are worthless by the time they get delivered. So that's why fiat is bad money, and why Bitcoin, which would take a massive amount of messing about for it to actually be debased. It's technically possible, but you'd have to get 51 or maybe 70% of all the Bitcoin miners to agree that they were going to change the supply limit from 21 million to 100 million, et cetera, et cetera, et cetera. But of course, if you go down into tokens, which are rubbish, people will happily pay with those. That's what old SBF was doing. Hey, I've got my token. I've got my SAM token. Do you want to take $20 million of that? I'll buy your company for that. So, okay. Yes. That low end is bad money, and the top end is good money.
I have friends in Lebanon who live there, and they have capital controls. You can't withdraw a certain limit in your bank. So I had some friends who, I'm not going to name them, but they literally have their cash in a vault at home because their banks won't give them money. Now,
Same
these
thing in
kinds
India.
of, yeah, I mean, these kinds of capital controls imposed by the government, this is where crypto comes in. But can something similar happen with crypto, whereby a government institution, a government entity or some sort of authority were to tell you, the private citizen, you can't transact with cryptos anymore. You can't use your wallets or your exchanges. Actually, your exchanges, that's happened in Canada. The Trudeau government literally went to the some of the protesters in the truckers convoy last year, and they locked the accounts on the crypto exchanges associated with some of the protesters. So exchanges can be capital controlled.
Yeah, I mean, governments make up the rules. They can do what they like. I mean, the Aztec government used to take its young people up the top of a pyramid and cut their heart out. The governments do what they like. That's the whole point of being a government, or the whole point of wanting to be in one, is that you have the power to do as you will. I mean, Roosevelt banned gold. He confiscated all the gold in America. It was a federal offense to have a gold coin after 1933. Yeah. And I mean, and that's America. And that's one of the most loved presidents of all time. So yeah, absolutely. They can say, oh, you can't have crypto. If you have crypto, we'll chuck you in jail for 8 million years. They can say that, and they can do it. I mean, plenty of governments do that to their people. Oh, by the way, you told a naughty joke about our leader. You're going to be re-educated for the next 6 years. So,
well,
governments do what they like.
I don't know if that last scenario is applicable to the West now. It's like, otherwise, we'd both be in jail. What's that?
No, that's what sounds.
Yeah, some parts of the world, that's a very real reality. What can people do then? People talk about, the separation of state and money, but what's the alternative? If not fiat money, what do we use? We can bash fiat money all day long, but at the end of the day, you and I are still using pound sterling and the US dollar.
I love it. I love fiat. I love it. I spend a lot of it. I make a lot of it. I love it. I like crypto. I make a lot of it. I spend a lot of it. What's not to love about money? I don't care what it is. I go out in fields of metal detectors and find ancient money. That's what I do for a hobby. I love it. I love it. I find coins from the 1600s, from the Roman Empire. Money's great.
Yeah, but you're not concerned that your fiat money is losing value to inflation.
Well, I don't like it, but it's the way of the world, isn't it? And can you avoid it? Very difficult. But there's this concept of financial repression. And, America and the West have had financial repression for some time. Where is the escape hatch from the devaluation of money at a certain rate? I mean, they want to devalue it at 3%, right? Well, that means whatever 3 into 72 goes, that every 20 odd years, your money's halved in value. I hope to live more than that. Well, maybe not much more than 20 years. But, that's a lot of devaluation. Since I started work, a pound is worth 20% of what it's worth today. Yeah. So that's how much our money's devalued. I say that because the cheapest car you could buy was 3,000 and it's now 15,000. So I take that as, I need 5 times as much money now as I did when I started in work. So yes, it's, but that's the way that governments work. They tax their country as much as they possibly can, and then they borrow more. And then to fill up that borrowing hole, they have to create inflation so that they keep their debt levels in control. It's just economics. How do you escape that? When it's financial repression like we're in now, very difficult, because there's no escape hatch. I mean, you can take it out of the country. And of course, if that gets a critical thing, they just shut that door. I mean, when I was when I was a young person, they only just taken off capital controls. I think it was 781 when they took them off. In the UK, you could not take your money out of the country. And in India today, you can't. Oh, and China, you can't take your money out the front door anyway. So, with financial repression, it's very difficult to find the escape hatch. And it depends on how much access you want to your money, how you get around the inflation effects on your fiat cash. And of course, it's very simple. I mean, you just buy, hard assets. But then, of course, you've got no spending money, have you? So it's a very delicate balancing act, and it all depends, getting back to liquidity, what your cash flow requirements are. It's very, very difficult, very, very difficult.
Let me ask you this. An average person that's well-to-do, that has some cash left over to invest, what percentage of his personal net worth should be good money versus the bad?
Well, I mean, most people are not cash rich, are they? So, most of it is not in money at all. It's in assets. So, if you are cash rich, then you've got to make a decision on how long you think this high inflation is going to last for. And I think there will be not high inflation, but there'll be more than low inflation for several years to come. So you'll see the value of your cash getting cut in half probably, I think, before this is all over. So it's very difficult. It depends how big your pile is. You see, I'll buy a forest. I'll buy, some lakes or something like that. But most people can't do that. So they have to find an asset that scales to their cash. And of course, equities don't have a bad record in looking after you, but you don't want to be buying a high of a market like we're kind of at now. It's not quite a high, but it's probably only halfway down.
How does one plan for retirement during a period of high inflation?
Get a job where they're going to need to keep you till you're 80.
Not an option. Let's assume it's not an option.
Well, I mean, most people just don't have enough money to retire. I mean, it's you need a huge sum, absolutely huge sum. Now, if you've had a great public sector job and you've got a pension fund, out to the moon, then I guess it will probably look after you. But if you're a private sector person and you haven't put it away, I mean, it's a major problem, isn't it? Absolutely major problem. And you've got to be an incredible saver pretty much your whole life to be ready for retirement, I think. And a lot of people right now with the baby boomers coming out, almost totally out of the workspace, because I'm the last of the baby boomers, 1963. I should say 83, shouldn't I? But I can't lie. 63, last of the baby boomers. So I'm 5 years away from retirement, theoretically. Or in the UK, it's 67 now, so 7 years. You see, that's how they make it work. Got to work till 67 now if you're normal. So 5 to 7 years, we are all in retirement. There's going to be a lot of people fortunately, a lot of people who've got on the property ladder have this big cash asset, and then of course they're going to downsize and live in smaller places because they're old and they don't want to walk upstairs, for example. So they'll be cashing in that one big hard asset, which is their real estate. So a lot of people will be working through by doing that. But it's very difficult, very, very difficult. I mean, I would say for most normal people, the best thing is property, because it's, they understand it. It's near them, it's hands-on, they can manage it, and they can make a yield out of it if they've got more than one, and they can rent it out. And the renting of property that you own is actually one of the few ways that you can kind of lock in some sort of index linked income. And there's not many of them out there for sure.
I was watching an interview with Elon Musk. Somebody asked him, what's one of the biggest threats that our society, humanity faces today? And he actually said population decline, such that we might get I think I'm paraphrasing here, but a death spiral of population decline. He cited Japan as one example. People stop having families, and eventually the population just death spirals to lower and lower and lower. You can't get it back. And then we lose.
Human species is going to go foop. I don't think so. There's a vast well of human potential that is lost because there's too many people, because there's not enough, it's like people.
So you don't agree with this?
No, people get paid terrible money because the poor are imported to keep the poor. Yeah. And, if you go to Switzerland, you'll get $35 an hour to clean a toilet because of their economic environment. And, if you educate more people more, you're going to get more educated people. And
their water is also $10 a glass. But yes, I get your point.
They have a great life there. So the fact that there's no poor people to cut your lawn for nothing is not a bad thing. I mean, that is a bad thing. That goes away, and you have to pay them $30 an hour. But you're so much richer. The ultimate wealth is how much space you have. Living cheap by jowl with people. That's poverty. Yeah, space. Now, people talk about Japan and their shrinking population and stuff like that. That's nonsense. Japan's a wonderful place to live for the Japanese. It's a wonderful place. Everybody's, it's just a wonderful place. Nothing wrong with Japan. There's a lot of very, very prosperous people walking around Tokyo. You won't see any hardship there. And if you think about population, well, Mr. Musk is going to be replacing all our blooming jobs anyway with robots. So it's only going to be the work of the mind that's going to be of any value. And you don't get that switch cleaning toilets at 16, do you? You get that by being at university till you're 35 years old. And, to get there, you don't need 8 billion people or 12 billion people or 20 billion people. You could do it on 1 billion people because everybody's levered up by AI, levered up by Mr. Musk's robots, levered up by his rockets, all that goes levered up by his.
You're saying productivity increases are more important.
Well, of course it is. Yeah, absolutely. And when you think of all those people that do skillless jobs and have got a decent brain between their ears, but no opportunity to actually use it or no easy opportunity to develop it, there's far and whole continents. Look at places like Africa and India. There are billions of people there that have not got a way of fulfilling their full potential. They're not Stanford graduate opportunities, are they? And imagine if they were, it would be the human potential is just vast and it's untapped, absolutely untapped. Well, not quite, enough.
Right. So human potential is untapped. Yeah. Living space is important. Maybe Thanos had an idea there. He wiped out half the universe, kind of.
Well, he was a bit of thinker, wouldn't he? Why didn't he just make the universe twice as big?
Well, yeah, or give everybody double the resources. I mean, he could have a lot of things he could have done there.
Not too bright, that guy. You could tell from his chin.
How do people? All right, final question for you, Clem. People want to make money in this environment where there's a lot of uncertainty. You're bearish on, I believe you said you're bearish on Bitcoin and cryptocurrencies long term, despite this recent bounce.
Not long term, short to medium term.
Short to medium term.
This year, yes. After the halvening, it's going to go to the moon. So it's all about timing. It's all about timing. And, at some point, when the NASDAQ has corrected properly and everybody's crying, it will be a fantastic time to buy.
Is the halvening going to make the stocks go up as well? You think the relationship there?
Well, I mean, if there are any crypto, I don't think that crypto is correlated with the overall economy for sure and the money supply for sure. I totally agree with that. I don't think they have much interaction with stocks, even though you'll see them moving together. But it's not stocks moving crypto or crypto moving stocks. It's money supply moving crypto and stocks. And that is the big effect. Now, at some point, the Fed will stop QTing and probably will QE, because it is the method of economic management these days. And when they've got inflation back to I think when they've got the ratio of debt to GDP back into a sustainable level where they all agree it's not going to run away and kill everybody, then they will stop QT. And there's a decent a distance away from that. And at the moment, they're hoping to get the deficit down to 700 billion. And when they do, the tightening that will probably all go away then. So maybe the answer is, when debt to GDP, when the fiscal debt is under $1 trillion, that might be the time to start thinking about getting back in.
All right. Clem, I appreciate your time. Thank you for joining us today. Appreciate it.
Cheers. David.
Thank you for watching Kitco News. I'm David Lin. Stay tuned for more. Don't forget to subscribe.